My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. I've been one of my friends. I'm just trying to save you some money here, because my job is not just to entertain, but to educate and put it all in perspective. Call me at 1-800-743-CNBC or tweet me at Jim Cramer. Now, I've been warning you that investors have been way too cavalier about this coronavirus and that it would weigh on us like an anvil until China gets control over the outbreak. And that's exactly what happened today. Dow slipping 170 points, giving it the longest losing streak since August. S&P dropping 0.90%, and the Nasdaq falling 0.93%. Remember what history teaches us. It's that the averages could go lower still if the authorities don't put a lid on this epidemic. In the end, this market wants answers, and the Chinese government is not being forthcoming about how this disease is contracted or how it can be treated, if at all. While public health officials are adamant that China's handling the coronavirus better than they handled SARS, which, of course, almost one-tenth of the people who got SARS died, well, I got to tell you, that's a pretty low bar. And all of the positive commentary about the Chinese transparency over there, it reminds me again, don't trust mainstream media on China. They're almost always too positive and therefore wrong. We keep discovering whole new places where more deaths occurred when we thought that it wasn't happening. Now, going into next week, this illness could eclipse the many earnings stories that we have coming up, because it is a big week. It's one of the biggest of the year. And it's a week where I try to get no sleep. That's right, no sleep. Although now that I've rebranded myself as Jimmy Chill, that might be too aggressive. But if we aren't freaking out about the coronavirus on Monday, we are going to be able to focus on something positive. And that, I think, is going to be the earnings from D.R. Horton. This is America's largest builder. And all the homeowners have been hurt by declining interest rates. The rest of the industry has seen a major pickup. But ever since the Fed cut, you know what? I bet D.R. Horton's going to say the same thing. And if we have any sort of control over the virus, say Sunday night, Monday, this one could go higher. And it could take the whole group with it. On Tuesday, huge day, United Technologies reports, and we're going to get an update on both China, where they have a gigantic business, especially Otis elevators, okay, and the Boeing 737 MAX woes. CEO Greg Hayes has a fantastic track record. He is, talk about transparent, he is that. Maybe we buy some United Technologies on Monday if we have a coronavirus-based sell-off. I want to hear also how the Raytheon merger is progressing. Can 3M finally break the curse of environmental issues and sustain weakness in a bunch of different businesses, including China? Let me put it this way. I think many of the negatives are finally being baked in, but the positives have been obscured by this chemical, the water contamination, which we know is just horrendous. Now, I bet you're going to see some of the more positives, clearly, but I'm not jumping up and down about this one. You know who has the best chance of reporting an upside surprise? Stock I don't talk about nearly enough, and that's HCA Healthcare. Hospital chain. It is a delivery machine, and you have my blessing to buy it for a trade if the market goes down on Monday. After the close on Tuesday, we hear from the most important company on earth. Yes, we hear from Apple, which I told you dominates all indices now. As Apple goes, so goes this market. And lately, Apple's been unstoppable, but there's a problem. I worry that it's run, well, let's say it's been too much. I've seen many high-flying stocks go lower on even the greatest of numbers. I'm expecting to pick up an Apple service revenue stream, and I want to hear management's appraisal of the lifetime value of its extremely satisfied customers. We need that number. When someone buys an Apple iPhone, what can they be counted on to buy after? All those different streams of revenue. I expect there's a chance this stock can keep climbing if they explain it the way I'd like. But everybody knows the iPhone 11 is doing well, so we need to see some positive guidance, too. If management is all circumspect, and I do believe the stock could get hit, that's why I recommend waiting if you don't already own Apple. No, I'm not changing my view to own Apple and not trade it. I'm just saying, let's maybe wait for a better entry point. Okay, we're also going to hear from AMD, talk about better entry points. This is another one that's rallied dramatically. Can CEO Lisa Su keep the AMD train running? She is the greatest turnaround artist of our generation, but she'll need to deliver spectacular results if this stock is going to stay where it is. AMD has advanced endlessly on every piece of good news, even good news from Intel, which was a great quarter last night. Their business at Intel and at AMD is on fire. But the last time this company reported, well, she delivered a great number. And yet, you know what? The stock did next to nothing, even dropped intraday. I told you to buy it then hand over fist. AMD's now rebounded to 52. A good call. Ultimate great expectation story now, though, Mrs. Haversham. So steel yourself if it initially performs like it did last time and give you a head fake that it was down. Let the stock come to you. Can Starbucks take out its old high? Last time it reported an inline result, and then the stock sold off when it had a conference and said some things that were regarded as being slowing. But then we spoke to Kevin Johnson at the Air Force Academy, and he told us a much more bullish story. Since then, the stock's gained $10. The only fly in the ointment? Coronavirus. Now, if you're barricaded in your house, you won't be going out for a triple vente cappuccino with skin wet anytime soon. On Wednesday, we find out how bad things really are from Boeing. Or how good. We don't know. But we're going to get it from the horse's mouth. This will be David Calhoun's first earnings call as CEO. Now, we got a very positive prelude with his 1 o'clock conference call the other day. But what I really care about is the cash flow. It's one thing to say they're just going to stand by the dividend. It's another thing to actually have the cash flow to back up that dividend. I also want to hear what happens in terms of borrowings if things don't go as planned with the 737 MAX. Most important, though, let's not bury the lead. Boeing got some late-day good news for once that the FAA may approve the MAX fly sooner than expected. A story that turned around the stock and also the entire market. It is very encouraging to hear that the FAA is pleased with anything Boeing does. We hear from General Electric, too. And a bunch of analysts are warming up to this one. Sure, obviously, it's got some of the largest problems, long-term care and an ailing power business. Let's say, under control. They have 737 MAX business, but one of Boeing's biggest critics pointed out that the stoppage might actually be good for GE's earnings. It was a boost their service business. I like CEO Larry Culp very much, and I believe a turnaround is happening this year, although not necessarily this quarter, because he's never set us up like that. Now, after the close Wednesday, we have Facebook and Microsoft. These are probably two of the best that are going to report this whole quarter. And one of the more bizarre pushbacks after Netflix's fine quarter, I debated actually replacing Netflix with Microsoft in FAANG. And that's how much I like this one to give us a whole new acronym. Since it's now Alphabet, not Google, let's see, you got an M, an F, and 3 A's. So here's what I want you to do. I want you to tell me what you can do with those letters on Twitter at Jim Cramer. Facebook stock has soared here. And it makes perfect sense. I think Instagram has become the single best way for advertisers to reach pretty much anyone, supplanting all but Google and maybe even Amazon. It will be hard for Facebook to keep down expectations, but they probably need more capacity everywhere to keep up with high demand. That's a high-quality problem, but it does mean more spending. Don't forget, Goldman Sachs has its first ever analyst day on Wednesday, and I think it will be beyond illuminating, especially since Apple will have already reported so that they may actually give you a little you lift the skirt a little bit on this Apple credit card. This is, I got $48 I spent yesterday. This is the new retail-oriented Goldman Sachs that could get a higher price earnings multiple because it will finally be able to explain what's really driving the bottom line, which has been obscured by the old reporting strategy that, by the way, existed when I was there. Thursday's chock full of opportunities. For instance, Coca-Cola reports. I bet it'll be a great number. This is an interesting stock to buy if we see huge coronavirus-induced declines, and that's the real possibility. The Chinese wouldn't be imposing this big quarantine if everything was under control. Next, there's Verizon, perhaps the most owned stock for Mad Money viewers looking for a steady source of income. I expect Verizon to deliver again, and if it doesn't, buy some on weakness. After the close, we get Amazon. They're in spending mode for the same-day delivery and for India, and Wall Street can never seem to get its head around when they're in spending mode. So if Amazon gets hit, gift. You want an upside surprise? You're going to get one from Western Digital because of strong demand for flash memory. It's cheap. It can go higher. Finally, on Friday, well, we hear from both Exxon Mobil and Chevron. Few things are more hated than oil right now. Chevron's Mike Wirth is an incredibly thoughtful executive who takes climate change incredibly seriously. But at the end of the day, what does he run? A fossil fuel company. In a world that's turning against fossil fuels, millennial money managers, they regard it as a curse word. Bottom line, we've got a huge number of companies reporting next week, but the biggest story by far will be the coronavirus outbreak. I expect it to give us a nice buying opportunity if a high-quality stock gets slammed, and that stock has nothing to do with travel or with China, then use the overall decline to pounce on it. Let's go to Chuck in Tennessee. Chuck!
Yes, Jim, thank you very much.
My pleasure.
It's Chuck from Tennessee, Nashville, Tennessee.
Okay.
You're the Cardinal stocks.
All right.
I have a large position in Walmart. I've had it for about 14 months. However, in the last 52 weeks, it's down about 14 points. I know it trades next month. Do you think it can gain some traction?
I think Walmart's fine. I think Doug McMillon has done amazing things. I think the stock is an up stock overall. I also think it's not really levered to what's happening with the coronavirus. I'm actually tempted. I was actually tempted to recommend the stock. I want to see a little bit more decline because it's such a big part of the market. It may come down just because of the corona. Let's go to Dominic in California. Dominic.
Hi, my grandson has a question for you.
Sure, man.
Booyah, Cramer. I'm a 14-year-old investor. I really love watching your show. Today I'm calling about a stock paying a $12 special dividend with an ex-dividend date of January 23rd, which was yesterday, and a pay date of January 31st. I picked up a lot of shares a few weeks ago, and I'm wondering if I should buy more or take Norton more.
No. Rick Hill ran that company. Remember I said that Rick Hill was charmed, that everything he touched is going to be good? I had a corporate governance conference where he said this was going to be great, and he made it great. And now he's done. But he walked me through the Norton LifeLock, and it was extraordinarily good. Don't sell. We're buyers. Lots of earnings next week, okay? But they'll matter less than the coronavirus. If you get a sell-off because of this exogenous event, though, I don't want you to fear it, because it will ultimately be a buying opportunity, because this will be solved. But not until the Chinese are more forthcoming. Well, Mad Money tonight. Who is the winner in the banking sector? Well, it's going to shock you. I've got one, and that group is rolling over. Then L Brands was the 5th worst performing stock in the entire S&P 500 last year. But what if the 4 upgrades so far in this young part of 2020 signal for the stock? I got to take a closer look. And it's a stock up over 600% in less than 3.5 years. I'll reveal the name and what you should do when I turn in my homework. Stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.